Hello, and welcome to this month's edition of the ESSSuper Investment Update. The Australian share market generated moderate positive returns over September, extending its strong start to the financial year. As at the end of September, the Australian share market was up 5% for the first 3 months of the financial year. More broadly, global share market returns were mixed during September, with central bank policies continuing to play a major role. The US share market was flat, Japan and China both moved lower, while the UK was up, continuing its strong run since it corrected post-Brexit. Investors and commentators globally continue to place a great deal of emphasis on the outlook for US interest rates, and markets react sharply to any changes in this outlook. The US Federal Reserve left the cash rate on hold again in September, and there remains a better than 50% probability that the Fed will increase interest rates in December, provided inflation and employment data remain on track. This chart shows unemployment has tracked steadily downward since the GFC, with the US close to full employment. The blue line shows core inflation, which is within the targeted range. If a rate rise eventuates in December, we don't expect a strong market reaction given messaging from the central bank to markets. However, the upcoming US presidential election adds to the uncertainty around this outcome. The Bank of Japan has been a leader in introducing unconventional tactics to stimulate its economy. In September, the Bank of Japan announced a policy to target a 10-year interest rate of 0, as well as continuing to target cash rate levels of just below 0. The green line shows where interest rates were 12 months ago against interest rates in Japan as at 30 September 2016, shown by the blue line. In September, Phil Lowe replaced Glenn Stevens as Reserve Bank of Australia Governor. There are no expectations that there will be material changes to the current policy settings. Second quarter GDP was solid, driven by government expenditure in Australia. The release signalled the 25th consecutive year of economic expansion without a recession in Australia, closing in on the Netherlands' 103 consecutive quarter record. And finally, the unemployment rate in Australia declined from 5.7% to 5.6%. Despite the strong performance from the Australian share market, returns were offset by relative weakness in international equities as well as strength in the Australian dollar. Across most option returns have been strong for the 1 year period, driven by share market returns as well as unlisted investments in property and infrastructure. We note that ESSSuper diversifies risk across and within asset classes to mitigate the likelihood of any one market or investment performance dominating the returns of the portfolio of the ESSSuper options. The long-term performance of the ESSSuper options remains in line with our expectations, and the 5-year results are above long-term expected returns. The default growth option has delivered 9.4% per annum over the past 5 years. It's important to remember that superannuation investing is primarily designed with a long-term time horizon in mind, and switching between investment options based on short-term returns can materially impact the performance of your superannuation balance over the long term. ESSSuper will continue to manage the fund's investments to deliver optimal retirement outcomes for our members, and we look forward to presenting to you all again soon. Thank you.